if it's not flexible, it's expensive. So here, then really, this is where I think buy now, pay later can come in, again, to manage that cash flow, basically give that breathing room for companies to sort of scale.
Hello, welcome to Commerce Talk with Smart OSC. I'm your host, Adrian Wakeham, the Regional Manager for Australia and New Zealand at Smart OSC. In today's acronym-heavy episode, we're going to take a look at what's next for the buy now, pay later, or BNPL industry. Now, buy now, pay later is most strongly associated with consumer goods, thanks to well-known companies like Klarna and Afterpay. Looking at recent financial results, however, it could be argued in many markets, we've passed peak buy now, pay later, and we're now in a period of consolidation. Or is it merely a holding pattern in the evolution of this particular payment method? So could buy now, pay later's future be away from the average consumers and lying with B2B or the business-to-business commerce market? So to dissect this part of the payments game, we're going to speak with a bona fide expert of the space, and I'm pleased to say, my new colleague, Stuart Thornton. Welcome to Commerce Talk, Stuart. Please tell us a little bit about yourself, your background, and what you've been doing specifically in this payment space over the last few years.
Cool, Adrian. Thank you, and thanks for having me on here. And hopefully, I live up to the sort of title of bona fide expert from today's conversation. Listen, I'm love to be here. Really happy to be here. Just maybe a quick introduction. I'm from the UK originally. Spent some wonderful time down in Australia, living there for about sort of 7 years, and now living in Singapore for the last sort of 12, 13 years. Long time in the telecommunications industry before moving into payments in 2014 with Worldpay, and it was really there that I had this wonderful opportunity to launch my own sort of startup, my first startup business opportunity, and which was incredibly fun and incredible hard work. And we built the business called hoolah, which was pretty much Asia's first, pure play buy now pay later company, which we sort of kicked off properly at the end of 2017. Most interesting, I guess, we sold that out to a company called Shopback last year. They're sort of very much focused towards cashback affiliate marketing, which was a great outcome, for us all. And in the interim between then, around sort of October last year and now, I set up my own consultancy company, advisory company, and venture building, typical thing that you do when you've sold your startup company because you don't want to go back to work for a company again, which has been sort of a lot of fun as well, working with some very interesting people and companies, and of course having this great opportunity to partner, with Smart OSC, for the future.
Awesome. No, thank you very much for that, Stuart. And I guess before we gaze into the crystal balls to have a look at where buy now, pay later is going in the future, it's probably helpful to have a quick look at the sector's short history for anyone in the e-commerce space who's been living under a rock, but also to figure out why exactly it might fit with B2B in particular. Now, detractors have said that buy now, pay later is not much different to just racking up credit card debt. It's just dressed differently. So what is it about buy now, pay later that means it isn't just, pushing pain down the river, as we've read from some of your own writing?
Yeah, absolutely. It's a really interesting question to kick off. And as you sort of alluded to, there has been some interesting commentary, in the sort of public domain of recent times. And I think from my perspective, having truly believed in the technology and the functionality behind it and what it's capable of achieving, I find some of it a little bit a bitter pill perhaps to sort of swallow. But I do understand, some of the context. When we were building, the business, what we saw really was this amazing opportunity to actually challenge, the concept of credit card debt, and really help consumers to sort of positively manage their payments over a short period of time. So to call it, sort of personal cash flow, for want of a better term. And the way in which we also went to market was this concept called responsible affordability. You know, we absolutely believed in this being something for everybody, to help them afford the things, to get them out of actually, ironically, a debt trap. But we also lived up to that, I think, in terms of how we were building, you know, the back-end technology. So we were able to use that technology to, you know, to really sort of manage perhaps who was able to use it, how often they were able to use it, and also the value of what they were able to use it for. And by doing so, you know, we were able to limit actually that sort of debt position. Now, that's not necessarily perhaps the case, you know, for everybody in that sort of in this space. And so I think it's a really sort of an interesting, you know, context again when you start to sort of read about what's happening in this sort of in this market. I think a lot of it also comes down to, as I sort of alluded to, you know, the type of company that you know, ultimately is offering the solution. I mean, a lot of it comes down to the risk management and the attitude, you know, towards growth. And I think that's one of actually the bigger challenges, is that there's been a constant sort of, you know, venture-backed focus on unscalable growth, or at least unachievable growth at all costs. And I think that that's where perhaps it's contributed to a slightly more negative outcome, because, you know, the business model does work. You know, the elements between the sort of unit costs can work if it's done, you know, properly. And I think that the right risk management is put into place. But I think, you know, very quickly, when you look at, I think, the sort of difference between credit card debt and between, you know, to buy now, pay later, I think it's quite interesting, you know, to sort of see that, you know, when you look at a credit card, for example, there's it works in a very different way. It really focuses on, you know, sort of making money really out of people's unfortunate sort of cash position. It has, you know, a sort of a compound impact on that debt position, whereas, you know, buy now, pay later tends to work in a very different way of looking at it more of a sort of transactional level. And as I sort of said, you know, we never saw hoolah as a credit model. You know, it was really valued to everybody, including, you know, the merchants and the partners, as well as the consumers that we looked at in this, you know, in this sort of in this market.
Yeah, you know, and I think, and I guess in particular when we start talking about it from a B2B standpoint, is, except for potentially just some ad hoc purchases, or if it had been somebody who was new, hadn't been approved into a system, there weren't that many there's not that many credit card payments anyway in the B2B space anyway, certainly not when you're talking e-commerce. So I guess my next question from them would be, so you're seeing that buy now, pay later is providing similar benefits into the B2B space as it is done in the business consumer space, in terms of, you know, in terms of what that overall shopping cart value would potentially be, simply because of it's the size of the baskets, the frequency of the orders, and all the other bits that would normally come as part of that.
Yeah, absolutely. I think that's, well, first and foremost, you look at B2B and specifically, I think the SME space, you know, at least across Asia Pacific, you know, it's a massively, it's a massive industry that really hasn't been engaged, I think, by technology to a significant amount. You know, it's very underserved by, especially the sort of cash flow type, you know, type solutions. You get a lot of back end solutions, you get a lot of SME financing, but a lot of these and credit in general, you're starting to see, but the banks don't necessarily focus on this space. And a little bit like the consumer space, they haven't really engaged technology to try and, you know, help them sort of engage and provide those services that ultimately a lot of SMEs require. And if you look at the specifics around at least the value proposition of what hoolah delivered to our customers, you know, first and foremost, I alluded to the sort of concept of cash flow. I mean, that's like the number one biggest issue that any company has, big or small. They're always trying to sort of make sure that they can balance that, you know, payment of in and out, especially at the end of the month, and that's rarely achieved. You know, always someone gets impacted as part of that sort of buyer supplier sort of chain in some description, whether it's someone paying late and not getting their, you know, their cash. And ultimately in difficult times, that becomes something that a lot of companies can really struggle with if they're not being paid or on time, especially when their sort of cash flow starts to get impacted. And that's a little bit like the sort of consumer side, in terms of managing, that personal cash flow of what comes in, what goes out, to buy either the things perhaps, they want, but also importantly, the things that they need. And the other thing, I think, the other sort of couple of things that, that were really powerful around, the buy now, pay later in the consumer space is that it was really almost an ecosystem or a marketplace type environment. You were basically connecting a consumer to, to a merchant or a brand. And again, in the B2B space, the number of times I sort of sit there myself running a business trying to find, right, who's the best supplier for X, Y, and Z. And actually, by virtue that you're bringing together, two companies who have a similar want to do business, and therefore also sort of grease that wheel of doing business by offering, some sort of functionality like buy now, pay later. Again, I think there's a lot of parallels to it. And then you sort of alluded to, the sort of shopping cart value. I mean, two of the biggest things that came with the shopping cart value that we provided, at least for around the conversion, but also that sort of loyalty engagement of bringing companies back. In this kind of model, I think everyone wins. The buyer manages the cash flow carefully over a short duration, and the suppliers get this opportunity to grow the business because you're getting people buying from them and buying perhaps what they either want or need as part of their business. And of course, if you're providing this kind of value of cash flow management, you've got this wonderful opportunity to create this loyalty engagement between those parties and get people coming back and using that on a more sort of often basis to help them to to sort of scale their business. So actually, I think there's a lot of parallels between the B2B and B2C side, perhaps even more so, being more pronounced for the B2B space.
Yeah, and it's certainly come through already, and I can even just having a look at some of the other questions which I'm going to ask you is I can see that a lot of this is sort of going to come back into cash flow management as being I guess one of the real benefits of this, because again, interesting when you look at some of those brands that are coming into B2B for the first time, they're coming off a very low base, or in some cases a zero base, where it comes to an actual e-commerce functionality in their site. So conversion rates and actual just gross sales in many cases is not actually the underpinning factor as to why some of these B2B businesses are transforming to offer B2B functionality. So it's an interesting point. So and I guess with that in mind, other than that, I mean, how does the buy now, pay later offering enable B2B businesses more room to maneuver?
Yeah, I mean, listen, first and foremost, right, you get, as I sort of alluded to, you get to the end of the month, and you've got, all of a sudden, you've got sort of 2 or 3 other ad hoc purchases. You're having to try and find sort of cash to go and, pay that out, maintain your positive credit position, with respective sort of suppliers. It can create a lot of stress trying to find that sort of cash, especially if you're a trading organization, perhaps, where you're almost sort of living based on that sort of margin contribution to deliver that sort of cash cash flow. And if you can ultimately have certainty around those models and spread those perhaps ad hoc costs, or perhaps growth investment costs, like buying more stock, for example, and paying that off over a period of time, which gives you that sort of flexibility to perhaps then ultimately sort of manage that outlay but then also to pay off that outlay over a period of time, but receive the benefit of selling those products quicker and ultimately getting that margin contribution back into the business. That's a really positive place to be, I think, for any company. And I think in that sort of, on the other sort of side of things, as a buyer, when you sort of say or a supplier, sorry, when you sort of set your terms for, say, right, you need to pay in 7, 14, 30 days, and someone doesn't pay, for example, or you're still waiting for that payment after 30, 40 days, whatever that looks like, and you're having to manually invest, costs of people to try and to sort of follow up, that becomes incredibly painful expense and cost, both in terms of money and time. And if you can get that money up front, and you don't have to worry about that at all, that cash flow as a supplier as well is significantly, positively managed. So if you just simply look at the two ends of the spectrum, you're already creating a lot of flexibility and opportunity in that sort of ecosystem.
Yeah, well, it comes back to that risk, that overall risk management profile that you've got, because you're always having to forecast and estimate, and yes, you need the inventory to sell, but it's brought plenty of businesses down is holding too much inventory because sales haven't gone as expected, and they're left there holding the baby, for one of a better description. So yeah, definitely another area there. And I guess so further to that, so in the past, and you've alluded to other places where traditionally SMEs in particular have got access to their operating capital. Is where else are you seeing the buy now pay later can provide SMEs in terms of this credit access that they perhaps wouldn't otherwise get from the existing banking sector or other business lines of credit?
Yeah, listen, I've done a little bit of research into this, just to, sort of with some of my new hat on, post hoolah, and I think it's really interesting to look at the market across Asia Pacific as a whole. The way I sort of see it, you've got effectively sort of SME financing, which tends to be a sort of a larger lump sum of working capital cash or some sort of revolving facility that obviously comes with an interest rate bearing model, but tends to be a larger amount of money, and so that if that cash is not optimally used within the business, you're paying for cash that you ultimately don't need. So that becomes quite ineffective or inefficient, perhaps, of capital management. Then on the other side, you've got sort of providers that are looking at specifically at working capital or sort of receivables financing, and again, it comes with a sort of a similar type model, but also some restrictions around the access to that. It might be, for example, a platform that allows multiple providers to go and to lend that money in, but it can be very inefficient and inflexible around sort of scaling down or up over a period of time, and especially getting alternative lenders perhaps to come into play because you've got your receivables locked away with one particular partner. So the flexibility is challenged. On the credit side, it's interesting to sort of see that credit tends to be, if it is allowed and provided, it tends to focus on perhaps more limited companies, whether it's PTY, PTE, whatever sort of country you're operating in. But on the other side, banks tend to be sort of challenged, I think, in this sort of environment around offering this kind of service to SMEs, either sort of new companies or sort of small companies, because they won't take that risk because it's using perhaps traditional old school, if we use that sort of terminology, type credit models. And so companies that are trying to get that foot above and trying to sort of grow and scale responsibly their businesses, it becomes a real challenge because they don't have access to those sort of credit functionality. Perhaps they might have sort of some sort of overdraft facilities, but overdraft tends to come with a significant cost, and especially having that capital locked away in the business is to back that overdraft up. So there's not a lot of flexibility, I think, at this sort of space for companies to really sort of scale. And if it's not flexible, it's expensive. So here, then really, this is where I think buy now, pay later can come in, again, to manage that cash flow, basically give that breathing room for companies to sort of scale, to effectively give them the ability to sort of digitize their business as well as part of that process, but also use data ultimately to assess the risk of a business, either either at a transactional level or perhaps incremental levels throughout a certain sort of duration period of time. And again, I think that this is where there's a fantastic opportunity across the region to really look at that kind of solution.
Okay. And yeah, and I think one thing that has been a hallmark of the buy now pay later sector, and a lot more of these more modern payment platforms, is they do approach this very differently to what the traditional banking organisations have, even in terms of how they're assessing and taking on partners. And as you're saying, in particular in the SME space, they're again, obviously you'll you're more familiar with regional. I sort of look at it from an Australian standpoint, and the bigger banks traditionally in Australia tended to all be going after just much larger customers, and they left a lot of this long tail, and I guess the real bulk of the smaller businesses who collectively contribute a lot more into the economy, but they were kind of left a little bit hanging.
Absolutely.
Into you can go. So what I'd like to do, I'd like to actually drill down a little bit further into some of the very specific pain points that we've sort of touched on a little bit already, but drill down into some of the real pain points within the B2B space, where we can get a bit more granular in where buy now, pay later can address. So, and again, you started talking about it already in terms of even just the timeframes that are involved here. So how would you? So, are you saying that buy now, pay later, can that solve that really time-consuming credit approval process that many of these B2Bs are facing in the first place?
No, 100%. Well, listen, if first and foremost, if you're a sole trader of some description, time is your most valuable commodity, because you're wearing 15, 20 different hats to try and grow a business. To your SME, where perhaps you have a slightly larger team to sort of go and manage this, but time again becomes critical. It is our most valuable commodity when building a company and a business, or even just running a sort of a company. And so I don't know if you've ever been through this process, but I'm going through it, trying to set up our first bank account, and going through overdraft facilities, and trying to sort of create partnerships with alternative lenders. Even it's an incredible struggle of time and forms and compliance and governance, all of which are important, of course, when working with money. But it is really sort of difficult to do that. Now, all of a sudden, if you find this model that helps you, one, to digitize, two, to use existing sort of data, to allow either transactional level analysis or assessment of risk, or it's at a certain, as I said, sort of a certain point of time and repeated over a period of time, you've got this tremendous opportunity, I think, to really sort of solve this problem, as I said, for sole traders all the way up the sort of the ladder of different types of scale and size and type of business. And so I think 100% yes, this is something that ultimately can be solved.
Yeah, and and I think, and even when we're talking about, B2B is a vast engine across many different industries. Are there any particular types of businesses or niches or verticals that you think lend themselves particularly well to buy now, pay later? If we're talking, I guess, if we're talking particularly about low-hanging fruit, if you're in that space, this is where I think both sides would see the quick wins.
Absolutely. If I had a penny for every time one of our retailers, for example, with hoolah, asked us, can we use hoolah for our own internal sort of functionality, I think perhaps hoolah would be even more valuable. But listen, I think retail is the first thing that comes to mind, right? You have to buy stock. You buy stock to grow your business. There's always a limitation of cash flow to enable what you can buy. If more stock means more business, more sales, assuming you get that the other equation of brand and product correct, you've got a great opportunity to go and sort of scale a business and again manage that sort of cash flow over and above a short period of time, and a controlled period of time, rather than some large working capital loan that sits in your balance sheet that you're paying extensive interest rates on, to go and sort of provide that solution. And again, buy now, pay later is a payment option in effect, so it's not necessarily a credit or lending functionality. So it's just a completely different structure to what you see today. That just gives businesses such a wonderful, especially in retail, this wonderful sort of pickup. But to be honest, from my view, wherever there is a buyer and supplier, I think there is an opportunity for considerable digitization, and really the sort of issue of payment terms and sort of manual intervention, manual management, communication of simple commerce, can be challenged, I think, in a very positive way by B2B, buy now, pay later. I think it's a great opportunity.
Yeah, and you've already touched on obviously time savings, just the general cash control savings there. Are there any other features that are particularly unique to buy now pay later that you think would make bulk payments easier for B2B?
Yeah, listen, I think as I said, we alluded to time digitization. I think I've spent a little bit of time researching the food industry, for example. It's still heavily, I think, about as digital as they've got, is using WhatsApp to communicate, but still heavily sort of invoice and bank transfer sort of driven. The sort of card schemes tend to not be sort of so engaged in this space, but there's a great opportunity to use that opportunity, I think, to help companies. One of the interesting things, as I sort of alluded to, I think at the very beginning, is that if you're ultimately bringing a buyer and a supply together, which is sort of one of the things that we sort of saw in hoolah on the perhaps more affiliate engagement opportunity, you've got this great opportunity to bring people together, to sort of assess each other's opportunity, which is another sort of win opportunity for for this kind of model, and ultimately, as I alluded to, sort of some companies and some industries don't necessarily have that digitization. So if you've got this carrot of cash flow management, perhaps that's also an opportunity to really drive that digitization right through the whole sort of journey, from front end e-commerce transactions all the way up into your sort of ERP or finance systems, and that sort of embedded integration.
Yeah, and I think as happens everywhere, the devil's always in the detail, and when you're talking, business to business in general, the buying practices and the needs can be very specific from industry to industry, and even from business to business. There's the old chestnut. There's no such thing as a one size fits all. So how are you seeing that the buy now pay later solution providers would need to address this? I mean, are we talking about bespoke solutions, per industry, or are there going to be some assumptions which you can kind of play across everyone and then you tweak it as it's needed?
Yeah, listen, I think driving a bespoke sort of situation could become quite sort of challenging, I think, for any of these models, because scale then becomes a significant issue. I mean, I think the one thing that I've seen more than anything is a lack of digitization, as I alluded to, with the food industry, before. I think I when I was sort of talking to one company, I think they were still even using fax machines to go and sort of send messages to each other and confirm orders. Actually, I think a lot of people talk about digitization in the SME space, and as I've said, there's certain sort of pockets of change that's occurring, whether it be sort of digital banking or finance back-end systems or sort of front-end, payment engagement, especially in the sort of physical store type space. But I really do believe that there's probably something missing around, and that's sort of alluded to the carrot here of actually helping a lot of these companies to digitize properly, to actually communicate, engage, using digital platforms to really sort of get away from sort of some of these challenges. I mean, the number of conversations I've had in the past sort of 5 years with companies trying to even still communicate with paper and intermediaries and what have you is particularly challenging. And if you've got this one engagement between sort of two parties, I think there's even opportunities for new business models perhaps to come through, where in random industries that we haven't even thought of, where credit terms and risk and sort of payment over a period of time is actually sort of important, but you've got this great opportunity to digitize that. And I've seen that a number of times actually through my sort of consultancy work in the last sort of few months, companies in as I said, random industries looking to go and employ this kind of opportunity. So I think rather than changing the model to suit an industry, in conclusion, I think a great opportunity to digitize and change perhaps some of these industries to actually create additional value in the future, and the buy now pay later functionality ultimately could be the driver behind that.
Yeah, and you mentioned before, in terms of other opportunities here, because you threw out the world, you threw out marketplaces as an option there before, and it's interesting. You sort of look at some of the more established buy now pay later solutions you mentioned as well, like even with Hoolah's acquisition by Shopback moving into that affiliate space, is the lines start to blur a little there, because there, and certainly some of I'll call them notorious buy now pay laters, have basically evolved into their own marketplace, their own ecosystems, and that has changed the merchants who use them, has changed how they actually interact with them on a day-to-day basis. And I guess that I guess is a segue, I guess, into sort of where it was going next, is talking about we always like to put in some cautionary tales as well, because there's always going to be some use cases for which our topic of the day perhaps isn't something you want to jump straight into without having made sure that you've done your due diligence on it. I guess, probably the most obvious one is, are there going to be some industries where B2B payments simply too complex for buy now pay later, which again, the appeal of buy now pay later always wants simplicity for the buyer, certainly for the buyer, and arguably for the merchants as well, as one of the main drawing points to it in the first place.
Yeah, I mean, listen, you make an interesting point just very quickly on the sort of consumer side. I mean, we saw pretty early that this was never going to just be a payment option. This was actually going to be something a lot bigger. And ultimately, towards the end, which I think is a lot of, parallel to the Shopback purchase, that we were more of a marketing platform for our merchants than the buy now pay later payment option. Almost just sort of was a function as opposed to the sort of core. Quite often towards the end, we sort of saw a lot of companies calling themselves buy now pay later, and actually we were distancing ourselves from that sort of nomenclature, because actually we weren't really. We were really about being a marketing platform, for a lot of retailers. So ultimately, again, when you put that sort of context, I think, into the question in terms of complexity, actually so much of buy now pay later is quite simple. It is about just making that connection and making that connection easier to happen. Could there be industries, top of my head, I can't think of any, but I'm sure there could be some complexity. But as I said, I've seen it from from chemicals to oil to food to all sorts of industries that are actually addressing these opportunities. And to be honest, this is where I think some of my consultancy work has come to the fore, because I've got that knowledge and experience. It's almost irrelevant of what the industry is. Actually, you can apply the sort of same concept of bringing two people together or two company entities together and making it easy for them to transact. And ultimately, it's data that allows you to do that. And I think when credit cards haven't really permeated into the SME space, you've got an even bigger opportunity. And again, ultimately, this could be the killer app to to force the hand. Again, with sort of cash flow being the sort of the really the big outcome here.
Yeah, and I think in many of the standalone buy now pay later solutions, or those who have had the external funding coming in to build something new, that's where they're standing their ground now, because it was almost an antithesis to the speed in which the traditional banking sector worked. And interestingly, and I know it certainly happened in Australia, and I think when we were talking the other day, you were saying it was happening in Singapore and SEA as well, is the banks are finally coming onto the idea is, this is probably something good to offer ourselves to have as part of our product suite. So where are you saying that, where would you identify that the standalone buy now pay later solutions are drawing their line in the sand and saying, well, this is why you would work with us, as opposed to potentially just going to your bank?
Yeah, listen, I think there's a few different sort of angles to answer that question. First and foremost, a lot of the buy now pay later companies tended to be agnostic, perhaps is the word, of bank or card. And so by virtue of that flexibility, you didn't have to go and get access to that sort of service. I mean, credit card installments here in Singapore, which I think has started to sort of permeate into Australia banking market as well. They've been around for quite some time, but the problem is it's only limited to sort of certain subset of customers and certain banks. And so if you're banking with someone else, you're not always getting access or an opportunity to use that kind of service. Whereas buy now pay later was somewhat ubiquitous in that sort of context. And I think the sort of second part of that, again, kind of alludes to that sort of marketplace engagement. A lot of banks typically and not badly. I mean, this is the core of their business, will focus on a consumer or a merchant. Whereas, coming back to that concept of being a marketing platform, whether it's B2C specifically or even B2B, it's a very different proposition of bringing the merchant and the consumer and those sort of marketing functionality and data and technology together, to really create something. And that's not really a bank's core, capability. Will people use it? I'm sure they will use it, but the true value, I think, of buy now, pay later still, sits above a lot of those sort of bank type solutions. And the other angle to that really is then when you look at the sort of B2B space, as I sort of said, it's so underserved currently from credit and payment functionality. I think that's where, arguably there's a massive opportunity off the back of that. If it's successful, then perhaps banks will start to follow, but then you've got that same, sort of functionality, variance and difference that makes buy now, pay later companies and standalone buy now, pay later companies, successful. And you're sort of seeing that, and that's the whole reason why fintech exists as a vertical. It's financial technology. It's allowing competition in the sort of financial industry, because companies are coming up with newer technology, utilizing data, which allows them to sort of look at things in a slightly different way. Whereas banks have a very traditional mindset, a very traditional structure. Are they trying to change? Yes. Can they change? That's a debate for another time. But I think that's where there's tremendous opportunity in this space to take advantage of it.
And speaking of tradition and structure, is probably a really good point in time to bring in the R word where it comes to
I already know what you're about to say.
Yeah, regulation. It's been an unfolding debate, and it's slightly different in every market. So how do you see that the regulation question impacting the overall future of the sector?
I mean, first and foremost, when we were building, the hoolah business, regulation was always one thing that we were very, very focused on supporting. We work closely with the MAS, we work closely with the bodies in Malaysia, Hong Kong, Thailand, Philippines, wherever we were launching, we did an awful lot of due diligence, which was also expensive, but, having the right sort of team and people and partners around us to do that. But we knew that was the most important thing. We were not ultimately regulation sits there to protect people or entities of some description, in an economy. And we had, as I sort of said, that sort of responsible affordability and responsible spending mindset and marketing position and product structure, that it was absolutely important that we also educated the market, educated the regulators that what could be done in that space. Because often the problem is that you create new technology, you get new people coming in, and sometimes perhaps they have different motives or ambitions or don't necessarily have the same sort of compliance or due diligence mindset. And that's where I think regulation starts to cause, or lack of regulation starts to cause problems. So as I said, we used to work very closely. I've sat on a number of round tables, or whatever the description of the table was, talking about this and sharing and educating and being an advocate, for regulation. The problem I think with regulation is when it starts to, impinge on innovation, and perhaps it's not necessarily educated correctly around, what's possible and where the sort of restrictions, have to sort of sit. And if they apply perhaps the same mentality to the existing products and the existing structures, with that sort of that same regulation sort of thinking, that's I think where it starts to cause some pain. And perhaps a controversial comment, but I've heard some thoughts around regulation in Australia around this, around passing on surcharges, for example. I mean, it kind of goes against the whole concept of what buy now pay later is. You give this opportunity for consumers to go and use this service, and then you sort of charge them for it. You're almost taking from Peter and give to Paul kind of sort of situation. It doesn't make sense. Ultimately, it's an investment for the merchants to get access to that on addition. It's not like a credit card where it just becomes a functional payment pass-through type model. This is actually delivering a lot more value. assuming that the service provider is able to create that value, and that merchant can see that value of what they're creating. So I think regulation, as I said, it is incredibly positive to provide a foundation and a structure of best practice. But if you start going over the line and you start killing innovation, I think that's where it can cause a problem.
Oh, that's I can see choosing the regulatory panels is going to become every bit as challenging as jury selection,
Yeah.
in a criminal trial, because
Good point.
everyone has their own confirmation bias in some way, shape, or form, and if they come from the traditional banking sector as opposed to the fintech sector, they're going to view how it needs to be regulated through a slightly different brush. But it does seem there's a lot of arguing about something that people actually agree about, which is we need some form of regulation for the sector, because it's all about the security of consumers and their money, and moving forward from there. So okay, look, I guess we're coming to the end of our discussion today, which has gone really, really fast. And there's, as happens in every time I do one of these, you could probably keep talking about it for days. I guess to try and bring things around and to try and tie it up, we always want to come back to our guests to get some takeaways and key learnings that our listeners can go away and have a think about over their lunch, or if they're listening to this podcast over a beverage at some stage later today. Would you actually have maybe your top 3 tips for any B2B company who would be considering buy now, pay later as part of their suite of payment options? Would there be anything that you can put forward there?
Yeah, I'm not sure I've got 3 particular top tips to sort of share, but listen, I think, and I'm going to make a sort of statement perhaps, which is going to be incredibly obvious, but if cash flow is important to you, which I think almost 99% of people are probably going to put a hand up, have experienced it or will experience it at some point, trying to remove the sort of manual reconciliation and manual management of the sort of credit terms and credit management perhaps of payments, and ultimately looking for that edge to sort of help grow the business, albeit through sort of digitization. I think this is really a fantastic opportunity to go and sort of support this and try this, and ultimately it takes those kind of companies to create that sort of flywheel effect. The more you have a buyer and supplier that's using it, the more that you'll start to sort of see that market take off and starting to sort of see the benefit. The more benefits created, the more people talk about it. It's what happened in buy now, pay later here in Singapore when we kicked off hoolah. A lot of people said it wasn't going to happen, and now I read some articles that it's going to be the biggest payment option in Singapore by 2025. I mean, that I think is sort of certainly makes some proof points around what could happen in the future. And I think this is a tremendous space and opportunity to go and apply this in the B2B space.
Oh no, magnificent! And I'll throw one more at you. Let's turn the mirror back on the buy now, pay later sector, or those who are, if you were a buy now, pay later company coming into market or looking to join the fray, if they were looking to focus on B2B, what would you be advising that they probably need to be doing before they proceed? Yeah,
it's a super question. I think first and foremost, the consumer buy now, pay later companies are fundamentally quite different. When you look at sort of data, a lot of consumers data risk is about the emotion and the affordability of payment at that moment of time, whereas B2B tends to be around the people that are in the company, the cash flow, the sort of balance sheet, profit and loss. So all of these data points, compliance perhaps, are all actually more important as on that sort of side. And typically those risk management, that risk management infrastructure isn't set up to sort of support that. But as I said, there are some fundamental benefits that are very similar, for the buy now, pay later and B2B space. And really, I think the big piece of advice, and I was given this actually at the very beginning, before we sort of set up, hoolah. I remember I'm smiling because I can remember the conversation in Starbucks, here, and the person that we spoke to and she gave me sort of three really sort of important tips. Number one, risk is ultimately the priority, and again, there's been a little bit of press about that, but it comes down to, I think, you're sort of focusing on the health of your business rather than growth. You have to manage that sort of risk carefully and conservatively, to go and create that value in the market, both for the customers but also your own your own health of the company and as a service provider. And jumping onto that point is disciplined growth. I think that's really important to go and structure. I think it's growth that careful growth rather than sort of venture growth is important. It can be achieved. And then ultimately it's to manage that cash flow. That's the most important thing. When you start looking at, especially in the B2B space, perhaps tickets are bigger, getting access to the right sort of lending models behind the business, whether that be banks themselves, for example, is super important to manage that sort of carefully, again, for the health of the business, to ultimately provide that healthy service provider platform for the buyers and suppliers that form part of that marketplace in the future.
Beautiful. Well, look, I think on that note, I'd like to again express my gratitude to you, Stuart, for taking the time to join us on the Commerce Talk with Smart OSC podcast this afternoon. Really, a really insightful conversation. From someone who certainly has lost the skin off knees and elbows.
Yes.
Going through all of this. So yeah, again, look, if there's anything you particularly want to shout out, or if our listeners are interested to know more about you or connect with you, what would be, what are the best ways in which people could get hold of you?
Yeah, absolutely. Well, first and foremost, the skin's starting to grow back, so that's a positive thing. Two, a massive thank you to you, Adrian, specifically. Obviously, we've known each other for quite some time, but also, Smart OSC, it's a tremendous business, and I'm delighted to be able to support that as well. As I have done, work closely with the team, for nearly sort of coming on, I think now for about sort of 10 years in multitude of different sort of ways. And to contact me, well, I mean, Stuart Thornton, you can find me everywhere. I think LinkedIn is probably obviously the best place, and all my contact details are on there, including the sort of consultancy company that I've sort of set up recently.
Beautiful. All right. And to you, our wonderful listeners, thank you very much again for spending time with us this afternoon. Don't forget to give us a like, give us a subscribe through whatever platforms you've found us on, including YouTube, where you get to see my ugly mug more regularly now than potentially is healthier for a good day. But anyway, thanks very much again, and we'll catch you next time. Have a great day. Bye-bye.
Thank you.